Good evening. Welcome back to Be Rich. Yesterday, I made a general analysis of overpriced stocks and especially talked about stocks which had lost money in IPO. Today, when I was to my surprise, when I opened the pink papers today, I found out two reports which affected companies which were basically platform companies which retail investors had invested a lot of money in, and both these companies have taken a big hit. The first company I want to discuss today is Paytm or 197 Communications. 197 Communications yesterday announced that the loans that they have disbursed to their merchants based on their payment records has gone up 4 times, and they were gung ho about it. But unfortunately for them, Macquarie, a foreign institutional investor, published a report which said that they had miscalculated the amount of revenue that this company would make. In fact, it was Macquarie's report that had damaged Paytm's IPO on its listing day. Today, Macquarie said their target is not 1157 and the target price is 900 rupees. They gave 2 3 reasons for it. I'm going to pick up two reasons. One, that a lot of their senior management who was responsible for the growth of Paytm have decided to leave Paytm for various reasons. This meant Paytm is bereft of some of its senior management which helped the company grow, and would have encashed their stock options, or they will as soon as the earliest day when the options can be encashed, they will encash it, and Paytm will find it very difficult to replace this talent. Some of these senior people who left were considered to be very close to the management. What Macquarie is indicating is that 197 is a sinking ship and the rats are deserting it. That the company has no path to profitability and the company will continue to sink. Second, they believe the choicest merchant loans have already been given, and to grow at the same rate is impossible. Paytm will not be able to find so many merchants to whom they can extend loans at such costly rates, and therefore Paytm cannot expand its loan business. And the continuing rise of Beam, Google Pay, Phone Pay, and others means that this company cannot be profitable based on its wallet. And since the UPI app itself will offer FASTag and other services, Paytm will struggle without any other source of revenue. The other sources of revenue which they are talking about are mutual fund distribution and stock broking are open to competition, and there is not going to be any lucrative advantage for this company. Therefore, they have decided to cut the rating to 900. The other worrying thing about Paytm, which they said, is this company cannot make profits till the financial year 2025. That means the year 22 23, 23 24, and 24 25 will be loss making for this company, and the percentage of losses will also expand. This means that Paytm will have to find another round of payments or in form of equity or debt to continue to be afloat. That is very unlikely that any fund financier or fund manager is going to put money in a company which has no profit profile. What do I mean by profit profile? There is no way this company is going to make money in the neither in the short term, medium term, or long term. Paytm has been around for a long time, and still there are no profits to be had. The other company which I wanted to talk about was Policybazaar. Policybazaar launched with a great funfair at around 980 rupees. The price had corrected only to 965, but in the last month, Policybazaar has seen a lot of correction. This is because in the first quarter after the results were announced, the losses went up. The losses were controlled in the quarter running up to the IPO by keeping marketing and distribution costs low. The idea that was sold to investors was that Policybazaar is a company where the entire process is online and there is no need for salespeople. So all they had to do, client would come, he would see the website, he would make the comparison, and he would buy the insurance. Well, that is not what happens in insurance. Insurance is a product which the benefits of service of payments made are undefined. Unless somebody meets with an accident, falls sick, or passes away, he is not going to see the benefits of insuring himself. So, insurance is a push product and has to be pushed by salespeople. And that exactly is what happened to Policybazaar, because while it can generate leads through its website, the selling has to be done by a sales team, either working from their call center or sending to meet the client face to face and make payments. This is extremely difficult because using this, there are hundreds of brokers and thousands of agents working over the length and breadth of India doing the same business, and they have personal connections with the client to secure a deal. Just because you happen to have a website and the customer uses it to compare the various prices, it does not mean that he will buy a policy from you. So basically, what Policy Bazaar is doing is running a giant insurance broking operation. Insurance broking is a highly competitive place where the margins are very thin and personal relationships matter a lot, and there's a huge selling cost. The original way the company was sold is by having a website and advertising in a big manner. Policy Bazaar has done away with the need for insurance sales, and the clients would automatically buy it online. Online customers will not come to Policy Bazaar, will go to purely online companies such as Digit or another Go Policy, where the entire process is online and the company does not exist offline. So there are pure play insurance companies which sell the product completely online. And if a customer wants to buy a product online, he can buy it directly from the insurance company and doesn't have to go through Policy Bazaar. Basically, Policy Bazaar brings no value addition. The sooner the market realizes it, the greater they fall in the price of the stock. Thank you for watching. Be rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support.
For hot financial news reviews and economical updates, watch Be Rich. Please don't forget to like, share and subscribe our channel.